Hey everyone, and welcome to this explainer. Look, let's just jump right in because if you're an e-commerce seller, whether you're absolutely crushing it on Etsy, moving series volume on Amazon, or building your own empire on Flipkart, Meesho, or Shopify, you already know that getting the sale is really only half the battle. The other half? Navigating the absolute labyrinth of tax compliance. Today, we're completely demystifying GST rules for online sellers. We're going to take what usually feels like a massive, stress-inducing headache and turn it into a super clear, structured system based exactly on our source material.
So, be honest with me for a second. Just in your own head, are your marketplace sales and your GST returns matching perfectly? If you're hesitating right now, even a little bit, you really need to pay close attention here, because the stakes are incredibly high. The GST department uses automated reconciliation, meaning even tiny mismatches can trigger terrifying notices and some pretty heavy financial penalties. But hey, don't stress. By the end of this guide, you're going to know exactly how to bulletproof your business against all of that.
Here's our quick roadmap for today. We've got 5 sections to get through. Common GST mistakes, then sales, exports, and refunds, followed by returns and tax credits, reconciling your monthly data, and we'll wrap it up with the ultimate compliance checklist. All right, kicking things off with Section 1, Common GST mistakes, specifically focusing on revenue reporting errors. These are the classic day one stumbling blocks. So mistake number 1 is underreporting or overreporting your turnover. Say your marketplace report from Etsy shows you made 50,000 rupees, right? But then on your GST return, you only show 40,000 rupees. That $10,000 discrepancy, that isn't just a tiny oops in your accounting, it is a massive red flag. When the GST department runs their automated checks, that difference is absolutely getting flagged and it leads straight to a notice. Your declared sales literally have to mirror your actual marketplace reports.
And that brings us to a huge wrong versus right scenario. Imagine you made a few small sales, but maybe you got confused and just filed a nil return. Actually, scratch that. It's not just a mistake, it's totally wrong. A nil return means absolutely zero business activity. If you had even one single sale, you cannot file a nil return. The only right way to do this is to accurately file your actual sales figures, honestly, no matter how tiny they might be for that month.
And you know, timing matters just as much as the accuracy. Simply filing late, well, that equals late fees, plus interest on whatever tax you owe, plus long-term compliance issues that actually lower your overall GST compliance rating. It's an unforced error that eats right into your profit margins. You've got to file on time every single time. Okay, moving right along to Section 2, Sales, Exports, and Refunds, dealing with international orders and refunds. This is where we get into the everyday, real-world complexities of running your store. Zero. Let's talk about the beauty of zero for a second. This addresses mistake number 2, which is completely messing up how you treat canceled orders and refunds. Imagine you score a 5,000 rupees order. Awesome. But then later in that exact same month, the order gets canceled and you refund the buyer. What happens to your revenue for GST purposes? It becomes exactly zero. The biggest mistake sellers make here is adding that 5,000 rupees to their revenue, completely ignoring the cancellation, and basically paying tax on money they already gave back. If it happens in the same month, your net taxable sale is zero. Now, if you are selling globally, you absolutely need to hear this. Whether you're pushing digital templates or shipping physical goods to the US, the UK, or Canada, the export rules are an entirely different ballgame from domestic rules. A critical error is treating an international sale like it's just a standard B2C domestic sale. No way. You've got to report it properly as an export of services or goods. Mixing these two up will completely tangle your tax liabilities. And building right on that international theme, we hit mistake number 10. When you make those export sales in US dollars or euros, you can't just kind of guess the conversion rate or use whatever Google says on the random Tuesday you decide to file. You have to convert those foreign currencies to Indian rupees using the proper official exchange rates for that specific period. Guessing completely throws off your ledger, and once again, the tax authorities will see a mismatch. All right, Section 3, Returns and Tax Credits, focusing on filing mechanics. We're going to walk through the actual forms, and more importantly, how you get your money back. This is where staying compliant actually pays you back. So there's a vital interplay between your different GST forms. Mistake number 5 is a mismatch between your GSTR1 and your GSTR3B. Just to recap, your GSTR1 details your sales, while your GSTR3B is the summary return where you actually pay the tax.
Imagine declaring 1 lakh rupees in sales on your GSTR1, but then you only write down 80,000 rupees on the GSTR3B. That 20,000 rupees gap? That's incredibly dangerous. It's basically a guaranteed ticket to an automated notice from the system. Those two forms have to speak the exact same language.
But hey, here is the really empowering part of the tax code. As an online seller, those platforms charge you a bunch of fees, right? Etsy fees, Amazon referral fees, your advertising charges. Well, all of those have GST levied on them. The fantastic news is you can legally claim input tax credit, or ITC, on those expenses. But, and this is a massive but, tying into mistake 11, you absolutely 100% must secure a valid GST invoice from the platform to claim it. No valid invoice, no ITC. You've got to keep those records pristine to get the credit you deserve. Another crucial thing is classifying your products accurately. Mistake number 6 is using the wrong HSN or SAC code. Literally every single product out there has a specific identifying code. A pet bed has a totally different code than a digital template, which is different from a printed t-shirt. Just slapping some generic code on the whole shebang is a super fast track to penalties. Take the 5 minutes to find the exact code for your specific inventory.
Moving into Section 4, reconciling your monthly data. Let's look at how all this comes together behind the scenes so your data sources align perfectly. Think about mistake number 9, your actual cash in the bank versus your declared GST sales. Make absolutely no mistake about this. The department can and will cross-check your bank statements against your GST turnover. If your bank shows you brought in 5 lakhs from e-commerce platforms, but your GST returns only declare 3 lakhs in sales, you're in hot water. The money trail has to perfectly align with the paper trail. So, how do you prevent that? Monthly reconciliation. I know, it sounds like a tedious administrative chore, but look at this super logical 4-step flow. 1, pull your marketplace sales report. 2, cross-check that exact report with your bank and payment gateway statements. 3, make sure that data perfectly matches your draft GST return. And 4, finalize your books of accounts. Do this every single month and you'll catch the errors before you hit submit, rather than waiting for an audit. And real quick, here's a highly specific, kind of cool scenario for our niche sellers, especially folks on Etsy. If you get an order, it cancels, and you issue a full refund entirely within the exact same calendar month, your GST liability for that specific sale is wiped out. It's 0. If by some chance that was your only activity for the whole month, this is that rare unicorn scenario where filing a nil return might actually be totally fine. Just verify your entries, but it's a great little nuance to know. Finally, Section 5. The ultimate compliance checklist. We've talked about the mistakes and the mechanics, so now it's time to arm you with the ultimate tools to protect your business. Honestly, you should print out this 8-point checklist. It is your ultimate shield against penalties. Match your sales reports, segregate those refund orders so you're not overpaying. Keep your export sales totally separate from your domestic ones. Make sure GSTR1 and GSTR3B match. Always use the correct HSN and SAC codes. Religiously do your bank reconciliation. Never, ever miss a filing deadline. And keep all those valid GST invoices locked down so you can claim your ITC. Look, if you remember absolutely nothing else from this explainer today, please remember this. It's the golden rule of e-commerce tax compliance. Your marketplace report, plus your bank statement, plus your GST return data must always match. There are basically 3 sides of the exact same story. If even one of them is telling a different tale, you are out of compliance. Which brings us to our final thought for the day. I really want to leave you with this question. If the GST department looked at your data today, like right this second, would your numbers match perfectly? If the answer is yes, then amazing work, seriously, keep it up. But if the answer is no, or even I'm kind of not sure, then it's time to open up those books, run that monthly reconciliation, and get it aligned. Believe me, the peace of mind alone is worth the effort. Thanks for hanging out with me for this explainer, and happy selling.